Hello, everyone, and welcome to another edition of the Smart Investor Podcast, where smart investors get their up to date price analysis and market information. Okay, over the weekend, I was at the World Money Show in Orlando. It was held at Disney's Contemporary Resort in Orlando, and it was overall a good show. We did some surveys of investors just to get what the market sentiment was amongst investors. And I heard several presentations from different members or presenters. And what struck me is the conviction. I go to the World Money Show quite often. And what struck me is the conviction of some of these bulls and bears. I attended a talk by a famous bear, and he has the same tune just about every year, that the world, essentially, the US stock market is going to go down, the dollar is going to start to collapse, and gold is going to go to the moon. Every year it's the same. It's the same speech, essentially. And it was said with such conviction this year, and the economy is in the tank according to him, and the market is going down, and gold is going to skyrocket. But what even struck me even further from what he said was that the dollar is going to start to collapse. And when he spoke about collapse, he said the dollar could lose 100, 200, 300% of its value in a matter of time. Really scare tactic stuff. And looking around the audience when he was speaking, folks were visibly scared, and because he spoke with such conviction. On the other hand, I attended another conference or seminar, and there was a famous bull there, and it was just the opposite. He was saying that the Dow could hit the 20,000 mark this year, and the market has a further 20-30% to the upside to go. And his argument was very convincing about the low interest rates, and the markets are just building a base right now to head further to the upside. Very convincing also. And different speakers, I popped in and out of different speakers, and some were bullish. The majority, I say, were probably a bit bearish. So on balance, the speakers were slightly bearish. And it just goes to show, and as an investor, a regular investor going to that show, I would not have any idea where the markets are heading and what exactly to do. Because you have these so-called experts come on, and with such conviction they say their opinion, and it's left for the investor to decipher what is happening. And if I was going to follow those folks, I'll be completely confused as to what to do with my money. And that's what it's all about, folks. People have portfolios, and they want just the best for their portfolios, and the confusion out there is startling. But I believe the best way to see what's happening in the market is to follow the price action. For example, if the bear, he was saying that gold is going to skyrocket, the dollar is going to skyrocket. Well, yes, if that's were to happen, you'll see it in the price action. So before you essentially take a move, look at what prices are doing, which brings me to this price action. This is a chart of the S&P 500 futures contract, and what we see is a market that recovered off of the bottom. Let me just show you exactly where the support area is. This is the area of support near the 18,000 region in the S&P 500. The market came down, tested this area back in August. We did get a bounce. The bounce did not take out this high, which is a bit concerning. Market came back down again, and is currently bouncing again. So what we are essentially is, I would say the market is neutral to slightly bullish at this point in time, because the market is not trending to the upside. As you can see, the market has been moving between 18,000 or 1800 and this 2100 region ever since October of 2014. This is 2014 here. So all of 2015 we had sideways price action. We did have a dip in the August September region, and then the market bounced back up towards the end of the year. So essentially the market moved sideways in 2015. It's the beginning of 2015, and the market moved sideways. And what happened is that the market came back down and is now bouncing again. But we're still in this area of, these lines are not straight. We're still in this 2100 area to 1800 area. Now, for the market to return bullish, we need to see the market break out of this. We need to see the market close above this high and start to break out to the upside. That will give the bulls confidence to say that the market probably has some more upside to it, because if we do get a break, it could be a fairly significant move to the upside because of the length of this consolidation. On the other hand, if the market breaks to the downside, we could get a pretty rapid sell-off. Let me just show you a weekly chart of the S&P 500. We could get a rapid sell-off if we do close below these support areas. So that's exactly what's happening in the markets at this point in time. We are in a period of consolidation, and you just have to prepare yourself for a decline. Know that this market could decline, because when a market tops out, a market, especially the stock market, it does not normally just go up and slam back down immediately. We could have months of sideways price action, and then the market breaks to the downside. So you'll have ample opportunity to see exactly what's happening in the markets. So this is what's happening in the S&P 500. Still slightly bullish, and we're looking to see if the market will break below the 1800 level. Or will it continue up further? If it does continue up further, it will give the market momentum to probably go up into the 22 or 2300 level on the S&P 500. Looking at the Dow Jones Industrial Average, similar setup. This is a weekly chart of the Dow, and I can just draw the consolidation pattern here. You see, this is the area of support, and this is what's happening in the Dow at this point in time. Market is still in consolidation, and we could break this consolidation. This is what we call a triangle. We could break this consolidation to the upside, or if we go to the downside, we could get a sell-off. Pretty similar situation as S&P 500. Key area of support in the Dow is just above 15,000. Actually, it's 15,370. If we get a significant close below 15,300 or 15,000, we could get a pretty strong sell-off in the market. Taking a look at the Nasdaq, it's actually a wrong chart. Futures of the Nasdaq, we have market bounce off of support, and it's currently in the midway between 3,900 and up to the 4,700 region. So we're still slightly bullish on the Nasdaq, but we're not out of the woods just yet. So in terms of US stocks, that's exactly what's happening, and it's important to, as an investor, to constantly look at the price action of what exactly is happening in the markets. Now, taking a look at overseas, we see the Nikkei 225 again is in a slight, it's in a troubling pattern of that we see on the charts of lower highs and lower lows. and that could be the beginning of a bear market move. So it's not confirmed yet, but if we see the market close below 13,000, then that will be even more bearish for this market. Looking at the German DAX, we see that the market just similar with the S&P 500, the market is recovering. And before I continue, folks who are listening to the podcast can go to smartinvestorcentral.com to see the actual charts that I am speaking about. It's on the market updates, I believe. Smartinvestorcentral.com, so you can see exactly what the charts are telling us, because I'm making notes on the charts as we speak. Okay, so onto the German DAX. Critical support in the German DAX is at this 8,500 level right here. We're seeing a series of lower highs and lower lows, which is troubling for this market also. Looking over at the US dollar, and this is a market, again, similar with S&P 500, that we are in a period of consolidation. This is a chart of the daily chart of the US dollar index. And what we can see here, let me just draw these lines so you can see. You don't have to be an expert in charts to just look at what's happening and look at the behavior of the price action. Okay, what we saw in 2014, late 2015, was a huge move up in the dollar. As you can see, the dollar went straight up, and there was a huge move up in the dollar. But ever since then, the market has begun to move sideways. Market topped out near this 100 level, came down, and this support point, again, the market bounced from this support point, came down close to it again, and looks like it could be heading this direction again, or we could again challenge this resistance area. So these are the confines of the US dollar, and from my experience in currencies, if we do see a break below this support area, we could see a rapid move down in the value of the US dollar. If we close above the area, we could see that's what we will call a breakout, and we could see the dollar continue to gain. So that's why you haven't really been hearing much about the US dollar either way, because the market has essentially been moving sideways over the last roughly over the last year, because we saw the top in the market in March 2015. We're currently March 2016, and the market is still in this sideways consolidation pattern. And we see these consolidation patterns sometimes at the top of a market. So what we could be seeing is a top in the US dollar. But again, the price action has to bear it out. So we have to see what the prices essentially do. Taking a look, so that's what's happening in the US dollar. If we do get a break below this level, as I said, we could see a rapid decline in the US dollar. And another note that I saw at the World Money Show is that most investors are invested solely in equities. So if we see a situation where equities move to the downside, a lot of folks' portfolios will be completely decimated, similar to what happened in 2008, because there were a lot of speakers speaking about diversifying in different sectors of the market. For example, the health sector, or the retail sector, or the financial sector. But what we normally see with these sectors is when the market moves to the downside, it takes all these sectors down with them. So that is not true diversification. True diversification is looking at different asset classes to diversify your portfolio into, and that is key. And just in the informal surveys that I had with a number of investors, and I will have the results of that survey next week in the next podcast, most folks' portfolios are just very vulnerable to equities, and they're overexposed in equities. It seems to be either equities or cash, or equities or some bonds and cash. There is no exposure to different areas or different asset classes. For example, the US dollar is an asset class that if the market starts to then trend again, you could take advantage of the trend in the US dollar. Or suppose the prediction of the bear, the very famous bear, comes through and we see a rapid decline in the dollar. If you position your portfolio to be able to take advantage of that, then you will actually profit from a move down in the dollar. Okay, so, and as I said, I'll have more about that next week. Now, looking at the gold market, let's take a look at the gold market. And what we see is that, let me just give a brief history of what happened with gold. We had a run up in the market. Let me take a look at the weekly chart. We had a run up in the gold market, bull market, from 2000 roughly up to 2011. The market topped out in 2011 and started to move to the downside. So we had roughly a 5-year bear market in gold. Let me go now to a daily chart. And as you can see, this was a bear market in gold. Now, what could be happening is that this breakout that occurred in gold, market cleared these resistance areas, as you can see, could be the first signs that this market could be turning around. What I would like to see is the market close above this 1300 level in gold. If we do get a close above 1300, that would give me more confidence that this market has actually turned around. And the next thing we want to see is a series of higher highs and higher lows, and that will indicate that the market has bottomed and you can get aboard this uptrending market in gold. So we're kind of, I would say, the market has started to see the first signs of a breakout with gold, and we could see, as I said, the beginning of what could be a move to the upside. Now, if we do close below the 1150 area into 1100, that would negate the pattern and we could see a move to the downside in gold. So just keep an eye out for that. Okay, so that's essentially what's happening to the different markets, and that's what we're looking on, or what we're paying attention to this week. Especially we're paying attention to the dollar, gold, and let me just quickly do crude oil, where we see the market moved up strongly yesterday. And what this could be is just a pullback in the larger downtrend. This is a chart of oil. As we can see, it has undergone a huge move to the downside. And I certainly wouldn't be going along this market. As you can see, lower highs, lower lows. This is the hallmark of a bear market. Lower highs, lower lows. And this could just be a pullback in the larger bear market, or a bear market rally, as they call it. So look for some resistance in the crude oil in the $40 region, and also the $41 region if we reach that high. Okay, thank you very much for listening. Remember, if you'd like to know how to diversify your portfolio, you can go to smartinvestorcentral.com/consult and you get a free portfolio consultation with a registered trading advisor. So smartinvestorcentral.com/consult. Thank you very much for listening, and I hope you have a wonderful day.